Hey guys, I'm Steve and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, do me a favor, hit the subscribe button. Trust me, you will not regret it. And if you're a returning subscriber, guys, welcome back. Listen, we had yesterday the announcement by Fed Chairman Powell about the increase in rising the interest rates. They're going to keep rising the interest rates from now until who knows when. It's possible. We stand at 3.74% so far in interest rate hikes. We could go possibly up to 5%. That is astronomical. In preparing for that, I've been looking over my portfolio. I've been checking out my watch list, which I'll talk about a little bit later. I'll share some of the stocks I'm looking at and what price point I want to buy into, depending on how the cost basis is and where some of these stocks, which are some of my own, sit and how I'm going to bring down my cost basis. Now, first thing I'm going to talk about today is the Federal Reserve, guys. With them doing what they did yesterday, it threw the market into a tailspin. It's a lot of uncertainty. We got one last thing holding us up right now, and it's the Christmas rally. Now, I don't know if we will have a Christmas rally. 9 times out of 10, we definitely gonna have a Christmas rally. Now I'm putting my money on it, not no pun intended, but I'm banking on, the holiday seasons. A lot of people depressed, a lot of people are watching the market. Nobody cares about that, the spending and all of that. You can raise the rates. People gonna buy stuff for their kids and for their families. So I anticipate a rally, and that's just my opinion. But moving right along. So I think after December, once everything goes over, and you know how it is, once you get past the holiday season, we're not rushed with the influx of holidays. Things start to normalize, and that's when I think we really gonna see that roller coaster drop, on stock prices. Now we go back to business. It's a new year. All of the entertainment is over with. Now the reality sets in. People start panic selling. A lot of people move the stocks around, stocks get shorted and things like that. And then it's a whole bunch of hysteria and a lot of things, like I said all the time, you can quote me on it, gonna fall right to you. So have your hands out and be prepared. Now I'll talk about the watch list, like I said, getting into it. First thing I'm looking at, guys, is my ETFs. Mainly my Vanguard S&P 500 ETF, ticker symbol VOO. If VOO, which is presently at 3, I don't have it on my computer, at 3 something, last time I checked, I think it was 324 or something like that. Listen, if VOO, the ETF, VOO, the S&P index, if that falls at 300 a share or below, and I think it's very possible in the next 6 months that this happens. And this is just something that I'm hoping, as a prediction, I hope it happens. But if the S&P 500 VOO ETF drops below 300 or at 300, I'm going to strike as much money as I can into that. Why? Because I have a substantial amount. And I don't even want to use that word substantial. I mean, plainly, I got 80 shares of VOO, right? And with the way the market has been dropping down and the way VOO performs in my portfolio, as soon as we have a streak, a mini run, my portfolio explodes and takes off. So I want to add on that. That's like my most important stock and my safest stock. But if that drops, I'm expected to put at least 20 shares into that. I have cash on hand, on reserve for this opportunity and a bunch of multiple opportunities. Some of the other stocks I'm looking at right now. I'm looking at Nike, and I'm gonna give you the stock price, not the stock price it is right now, but the stock price I'll start buying some shares at. We got Nike, $82. I'm waiting for it to drop $82. And all of these stock prices I'm naming, guys, right now, they might seem like they're far out of reach, but I'm telling you, the market does crazy things when people panic. And I expect us to have a fire sale going into 2023 because the Federal Reserve don't give a damn. They don't give a damn. They don't give a damn. They are going to cut every corner they can. They don't care about you making money in the market. They don't care about, you know, they're just trying to get the price of food down and everything back and get everything back to normal, you know, because they don't like the pressure on them. And they want America to run the way America's supposed to run. I have no complaints with that. It's apples and oranges. All I know is it's investment opportunities for me, for you, and amidst all the hysteria. You know, when things are being destroyed in life, something else is being built. And it's time for you to build your portfolios and get yourself in order. Like I said yesterday, it don't matter if you have $50 you can invest or $5,000 or $50,000. And some people out there have that expense. You know, I don't, but you know, make sure you stay in the market. Don't panic sell. Keep yourself on a narrow path and have a focus and have a vision and move towards it. I'm telling you, this opportunity right now will make you a believer. You will thank yourself later for using discipline. Getting back to it, I say we got S&P 500 VOO. If it falls at 300 or below 300, which I think it will in the next 6 months, guys, I'm buying. I got Nike at $82. If Nike falls at $82, I'll buy. Now, I won't, some of these stocks I'll make big splashes into as far as my purchases, some of these stocks, you know, I'll buy into and I'll dollar cost average as needed, because some of them I look at growth plays. When you have a growth play stock, you know, a lot of times when everything goes astray, the growth stocks is the first things that get liquidated. So I don't put most of my money in that. I put most of my money in the stocks that I know are going to be around for the long run, and they have incredible moats. And some of these stocks that I named today, well, most of these stocks I named today have moats, and a lot of them are household names, and the things that, you know, they're going to be around. So like I'll go to 3M. Yeah, 3M has the lawsuits and stuff. And it's something I found out about 3M that I thought was interesting along the lines of that lawsuit. I thought the lawsuit was totally on 3M. What it was 3M had a company that I guess they owned, a smaller company. They brought into the company after the company already had the military contract. And for the majority of the years, this company that 3M brought was the ones that manufactured, but they still were until 3M brought them. But the majority of the years before 3M brought them was when they were shipping all of the earplugs over there, and it was affecting a lot of our vets, which is an unfortunate event. And, you know, now they're not off the hook from that. They still, the last few years of the contract, it was under the name 3M. But 3M got slick. 3M tried to make the company go bankrupt. Like, okay, the company went bankrupt. Now the lawsuit still stands, you know, but that's big corporations. You know how they do. But yeah, 3M at $102. If 3M hits $102, I'll make a hefty amount of in the 3M, because I've owned 3M for a few years now, and it's done very well in my portfolio, guys. Now, I'm not telling you to buy any of these stocks, because my portfolio, my plan, and where I am financially, I can afford to do this, you know, and put a lot of money in these. I don't make these staples. I have my money in very small increments, 3-4% at the most, and any of these properties in any of my 3 portfolios. So it's just one of those things. Tesla, I had to bring up Tesla. If Tesla hits $200, which I said in multiple videos, if Tesla hits $200, I am buying. I'm buying a lot. What else we got? You got to take advantage of what's going on in the market. Last week in earnings calls, we had some crazy earnings for a lot of big name companies. And I got Amazon up here. Amazon, if Amazon hit $88.90, I'm on it. I'm all over it. You know what I mean? Now, I deal with a lot of dividend stocks and a lot of dividend plays. I don't have a lot of growth stocks. So a lot of these stocks that you see that I mentioned today will be considered growth stocks, because a lot of them in the tech sector. But this is just me trying to expand into growth stocks, because I mean, where I am right now, comfortably in my portfolio, right? I make a decent amount of dividends per month off of the portfolio I have right now. This right here, these stocks right here, some of these stocks are new, and they'll help project me and get me up with a higher dividend value, and also growing my portfolio on the growth aspect on the back end. Like I said, Amazon at $88.90. They had bad reviews they had bad earnings last week. All of a sudden, Amazon is like out. It's not the pretty girl in the dance no more. Still pretty to me, so I'm gonna still shoot my shot. You know what I'm saying? So Amazon, I'm going at $88.90. Pfizer, I've owned Pfizer for years, right? Serious dividend play. Paid good dividend too, and it's a good company. Pfizer hit $41, and it's close now. If Pfizer hits $41, guys, I'm buying. I'm stocking up. One stock I don't own, but I've always wanted to own, and I never got around to it. I don't know why, but Qualcomm, the chip maker. I'm trying to get into Qualcomm seriously. If Qualcomm hits $101, now this is just where I feel comfortable buying. Now, I'm not no analyst or anything like that. These are just the numbers that I've come up with, looking at, you know, my cash reserves and where my portfolio is and where I feel comfortable at buying in. So Qualcomm is at $101. Now, all of these numbers that I'm saying, you might go and look these up right now and be like, man, there ain't no way that's going to hit that. We didn't know Amazon, Facebook, and all these other things was falling either. So never say never, because this is going to be possible. I am excited about 2023 and what's going to happen. So we got Qualcomm at $101. Now we got Google. If Google hits $77, and Google's low right now, you know, Google is one of them stocks, man. I mean, besides what they're talking about, you know, with the earnings, I mean, Google's a good company. So, I mean, you got to take advantage of this, because, I mean, at $77, if Google hits $77, that's when I'm going to buy in. I don't see Google hitting that in another 10 years, unless we have some type of catastrophic event, you know, or some type of scandal that's like so over the top, it overrides the name. Google itself is a moat. $77, I'm all in. Facebook. Now, I'm not a big social media person, right? It's funny that I'm on YouTube. I'm saying I'm not a big Facebook. When I say social media person, I'm one of them people like I don't have to post every day and have every different type of account, TikTok, Snap, all of that stuff. I don't have to have all of that and have to be on it. I don't rely on that on a daily basis. So when I say that's why I'm saying big in social media. I'm not like, you know, I got to take a picture every 5 seconds, look at me with a selfie. You know what I'm talking about. But listen, if Meta hits $80, I'm buying. I'm buying in. You know, now I have some Meta, but it's like minute. It's like 0.8, it's like 10 shares or something. But $80 Meta coming off of a super, it had the 52-week high, it's super. So I'm looking at Meta as a growth play. You know, and then I'm anxious to give it 5-7 years to see what happens with this metaverse thing. You know, by that time, everybody have legs in there and it won't just be torsos running around and people complaining about it. You know, only because they heard somebody else say it. There are people talking about the metaverse, ain't never even seen it. I ain't never seen it, but I seen it on TV and it looked cool to me. So it's more advanced than anything else I've ever seen. Now, I'm not saying that's worth taking it, but it's worth paying attention to. And at $80, my eyes are wide open. I'm paying attention to Meta. Apple. Got to bring Apple up. Now, Apple is one of the last bastions to stand. You know, if it hits $111, I got to jump on Apple too. And my thing with Apple is the Apple dividend is so small. You know what I mean? I mean, it's increasing every year. But I mean, for Apple to be big as they are and, you know, they put their money in their R&D, I have no problem with that. And Apple is in everybody's thing. But like, could you imagine if Apple, for some reason, just went under? Like I don't want to use the word, but I'm going to have to say it. What if Apple had turned this, something happened with Apple like Enron? Man, do you know how many people's portfolios and funds and stuff will be messed up? But anyway, I ain't trying to put that out there. But yeah, if Apple hits $111, guys, I'm all in. The way I wrote this thing out, allocating the cash to each of these stocks, investments that I said, and the money I have going to each one, if it works out, I will be rich in 7 years. So let's shoot for the moon. Let's hope that happens. You know what I mean? But yeah, guys, man, listen. Buying time is close with me. For some of you guys, you know, you brought in at different times, and that's the thing I want to say. Yeah, it's good to trust the numbers and it's good to go buy all of these things. But like I said in a lot of other videos, there are people that have bought these things, these stocks, some of these stocks at the wrong time. I suffer from that, you know, in the past. If people out there right now listening to this video, you done brought a stock when it was at the 52-week high. And you're like, man, I'm stuck at the top. I can't even sell it. Now it then dropped low like this, dollar cost average, get that price down. If you believe in the stock, believe in the stock. A lot of people brought in at the top and they see that they're in the negative, or they see they're down 30 or 40% in just that investment, and they panic and they sell. Don't ever sell your stock. Because I'm telling you, it happened to me multiple times. I sold stuff I should have never sold because I was green in the game. And now I'm like, man, if I had kept them shares of stock, I wouldn't have to worry about nothing. You know, everybody loses money in the beginning because of ignorance. And I don't want to see that happen to none of you guys. You know, so I just want to share a little bit of my experience, what I'm doing, what I'm excited about. If you found a little bit of education in the video, do me a favor, hit that subscribe button. I can't say it enough. Subscribe, subscribe, subscribe. I love what I do. I love talking to you. And you guys leave me some comments, man. Y'all falling off with the comments. I used to get a lot of comments, but I got a couple of people that comment once, you know, on a regular. And I respect that. I'm going to start shouting people out. You know what I mean? But, guys, I appreciate you spending the time with me. It's a joyous occasion amidst all the madness that's out there in the world and the economy. But there's a silver lining, and it's financial freedom. And it's there if you want it. All you got to do is look up and grab that ring. You know? So, as always, like, share, comment, and subscribe like I said before. And I'll see you guys in the next video. Happy investing.